Hey folks, this is Shreyans, the CEO and co-founder of Finsire, a digital infrastructure for assets.
Okay. So, we like briefly touched upon how you come from a family of entrepreneurs and they are into the lending space. What led you to choose finance as the space you wanted to work in, and which eventually became a space you wanted to build a business in?
Sure. I mean, yeah, firstly, thanks for having me, Akshay. I appreciate it. There has been obviously a lot of sort of story that essentially has built up on this, right? Like, I do come from a proper Orthodox Maoradi family that has done business for the longest. In both maternal and paternal, I don't know if there were, any sort of, folks who work 9 to 5 or in corporate sort of a job setup for the longest, right? Like in my granddad's generation, my dad's generation, both maternal and paternal. I don't think anyone has. It was my cousins who initially started it off, working there. The credit business is actually a very interesting business that the family has seen all through, and me while growing up, because most of the Marwadis and most of the folks from the society, from this part of society, actually are in different forms of creditors. Like some take up secured, some take agri loan credit, some take vehicle financing, some end up doing gold financing. It's a very interesting sort of a cult or a culture that you see, because many of them are like these entrepreneurs are these creators in general. For me, it is a very interesting story. I had to kind of get into 9 to 5 very early on, because I'd seen the cycles of family business, right? Like during when I was growing up, probably it was high, and then a decade later, I'd just seen it fall down drastically in front of my own eyes. And it's so beautiful. In a way, it had its own beauty, only because of the fact that while I could see the riches, I could also see the flip side of being in a proper credit business sort of a family. I mean, it's not an easy business to run. If anything, it has to be one of the hardest in terms of risk, because the probability of kind of repayment, or the probability of someone kind of defaulting is unknown, despite all the models that have ever existed, right? Like, it is an emotional sort of a decision that one takes if one has can pay, cannot pay at a given point of time, and on the other side of it, also it needs to be kind of controlled in such a way. um, for me,
What went wrong in your family business? Was it regulations or was it NPS?
sure, it is a mixture of all. To be honest, I've written this elsewhere as well, but happy to share in the description. But ideally, what family had seen was that initially when they started off, I'm talking about right after independence in '52 or something, at that point of time, it was very interesting, the whole landscape of India. There are a lot of actually, formal credit players. Most of them were informal, and and the business was open for all in different segments. My granddad obviously got into giving loans to farmers based on, say, the produce that they had for the previous year or the previous 6 months. That was one kind of loan that he used to give. There's another loan that he used to give gold on gold, and the third type he used to give was give loan and take a chunk of the business, much like what modern VCs do. So he had obviously built businesses around his own initial credit business. The downfall actually came much later, say 30 years of seeing rainbow and golden sunshine period, was when actually a lot of banks and NBFCs spread out in 1980s in India, right? Like, a lot of them got privatized. A lot of the NBFCs actually got, like, kind of erupted in terms of giving out license. So his business model obviously took a jolt, right? Like, people now realize I'm actually getting credit for just paying interest, and one does not take my business, or one does not kind of uh, uh, see my produce of the previous month and just previous year, and just gives me kind of credit on that. They used to get lump sum credit from these various plans and by these lenders as well, right? So the actual downfall is twofold. One is obviously the competition that erupted drastically, which had forced him in, my granddad, getting into unsecured sort of lending. I
Okay.
mean, he's never done unsecured for 30 years, right? Like, and suddenly he's forced to do an unsecured because people didn't have. I mean, that's when things went haywire. bunch of NPAs that erupted post in unsecured lending. 91 was a very interesting time, and he lost a lot, fair bit of amount of money at that given point of time. And stories of the fact that retail businesses also got curtailed because of credit availability, and then he had to pump credit over here as well. So few bad decisions in mismanagement of pumping credit elsewhere. And obviously, to top it all, we obviously lived in a very informal segment. So most of his investments also were in the informal side, right? Like buying real estate or property, so on and so forth. He had done obviously a few fair misjudgments in investing in wrong properties that obviously belong to the governments, and a lot of issues with respect to that. So everything had a domino effect with respect to the business, right? So his personal investments also went wrong because of the investments in business, which is why a lot of learnings through this process, right? Like while his was easily an empire, probably built out of Chennai, and it took probably 30-35 years to build this empire, but probably took less than 5-6 years to actually take it all away.
Wow.
So that was a very interesting phase to see and to learn, and realize how something like this, kind of, if there's any business out there that can destroy, it's only credit business.
Mm. Yeah, so you had to take a job to support your family, or because you saw that joining the family business is not an option? And
Yeah, I mean, it do fools. I think you answered both. The interesting part was that at a given point of time when he used to do business, like my granddad probably in 80s and 90s, he used to do business with Dhirubhai, right? Like, so
wow.
Dhirubhai Ambani had in polyester when they started off, they had something called Vimal, right?
Yeah.
And then they acquired Vimal, and yeah, he was basically kind of leading whole of Vimal for South India at that given point of time, right? And that was a very interesting phase when he used to basically lead Vimal. He probably was one of those top shots, in the country for the whole of South India per se, because that was only selling like hotcakes, right? Like, and post that, obviously, he did a bit of bunch of businesses with different kind of businessmen like Kishore Biani himself, right? Like the Future Group of sorts, various businesses that comprise of this. It The fall was so drastic because of the credit business that it eventually led that, okay, not a lot of people were required for the business at all, and the supportive business at all for credit. I was always told, while I told that I'd probably join the family business and make it a lot bigger, because almost all of my cousins were in the business, right? Like I didn't know anyone who basically worked 9 to 5 or wanted to work 9 to 5. It was a very interesting and a new thing inside the whole bloodline itself. I'm like, I don't know what I do. Family is obviously seeing something which is very different. It's not seen ever in the last 40 years or so. I have to probably make a choice and decision as to seeing, do I get into something that is pretty much kind of has nothing left, or do I, kind of do something which is very different, 9 to 5, which obviously also led to me doing engineering, right? Like for someone like me, or someone like someone in Maradi family, it's very unique to do engineering as sort in the first place itself. So I mean, I did engineering. I was certainly good with logics. I was pretty decent. I was definitely very smart, but I was super persistent, right? Like, albeit if I didn't understand something, I'd probably be super persistent in learning the heck out of that. Job was a very interesting time because my the purchasing power of my family had dropped drastically, right? Let me just put it that way. And the ability to buy goods were just curtailed from so much so that I'm like, okay, now how do we increase the purchasing power, right? Like, first, to begin with, the only possible way for me was to get a job, and have an additional source of income, and it so happened that my first job was actually not in India, right? It was overseas. So I was actually excited for the not for the job, but the fact that I would be probably be earning in dollars. And it was in Hong Kong. I had this gig and used to earn Hong Kong dollars. Used to save up some money and send back home. Whatever was left, so on and so forth, and that actually kind of increased the purchasing power so much so that I could feel like from a time when the last few years, like where I could had to think of buying something twice, it was a lot getting easier at that given point of time, and I could probably plan and stuff a lot better than usual.
Uh, what made you what was the job that you were doing, and how did that lead you to entrepreneurship again?
Sure. So I mean, a very interesting sort of a job, right? Like the fact that yeah, I did engineering at VAT. I was obviously good in economics because I've been learning economics all throughout. Uh, my first job actually was you come here to Hong Kong, so it was part of the government again, few institutions and the government, so like a PPP project, and I was told to just go there and figure what do we do, right? So there are a bunch of projects that people are working on. I had to just pick one. I picked the one that obviously paid the most. I mean, interestingly, so I was like, I just need. I'm here. I'll probably make few dollars and get financially liberated because the last whatever years have been super tough. Uh, the only possible way to pick something like that was something that had a lot of supply but less of demand, right? Like by takers. So I ended up picking up the most boring sort of a project there, which was an infrastructure damage. So much so that when I used to explain to people or of sorts, people kind of used to get lost within 20 seconds or so. And interestingly, at that point of time, in 2017 or so, 16, 17, not a lot of people are actually working on this. At a given point of time, there are 2,000 odd, 2,500 odd people who would actually work on something like this, right? Like predicting when will Shanghai 101 fall, predicting when will Macau Tower, get damaged of sorts, taking the past data, linking to the future data and just building models around it. Uh,
Why would someone do this? Why would a company spend money on
So,
predicting when
yeah,
a building will
sure.
fall?
Like I said, it was a PPP project, right? Like by the government and by the institution of sorts. So basically, the government was interested in curtailing, say, risk hazards, earthquakes, or whatever in Hong Kong at a given point of time, in and around Hong Kong, right? So it was the Hong Kong sort of a government who was willing to do it for, like, say, the mainland China as well as Hong Kong sort of buildings, so on and so forth. So I mean, so I did that. They spent a lot on it. The budget for that was supremely high, because uh, they obviously wanted to. They've seen past pain because of these stars falling, so on and so forth. So if one could control that and get some sort of an accuracy to it, that would be something which is in their gamut. Yeah.
Was this for like saving lives, or was it a like my asset will be depleted by this date, so I need to create a corpus to replace it? Was it like a financial angle or a saving lives?
I mean,
Like
so the government thinks obviously in multiple ways, right? The government obviously thinks, how can I probably save lives at a given point of time? How can I, if I have to demolish it or kind of do rehab to it, so on and so forth. How much? When do I start doing this? Then the whole idea that, okay, fine, there are a lot of development taking place around, say, Shanghai 101, but that tower is probably getting old, or likewise for the Macau Tower, so on and so forth. So the government obviously had multiple angles, and on the report, we had to put all of this, right? Like, say, you have to probably do rehab to it within, say, the next 2 years. If not, things might go wrong. There would be another crack, and the process of it was very kind of interesting. And I have a very interesting thought to share, right? Like here, obviously, because working for, say, the Chinese governments, or say the Hong Kong government, so on and so forth, the way they think is actually very different from, say, any other country, right? Like both China and Singapore. That's where I worked for next 2 years with the Singapore government. But both
same profile.
yes, right. Like the way they think
Okay.
is actually something which is very unique. Which I'm kind of satisfied because I worked my initial few years there, right? And I didn't work in, say, an American entity, or say, someone from the west of sorts. What they do is actually very interesting. They actually dumb down every sort of a problem statement, so much so, right, that it's impossible not to understand, right? You don't have to go and ask your colleagues, or you don't have to go and ask the mentor, or your boss again on how to do a certain problem statement. The ability to dumb down amongst Chinese, step by step, is just blows my mind, right? So sometimes I used to think, how the hell can someone even dumb down so much so that it just makes it like the whole process more seamless, and in a very simulation sort of a scenario, right? So I'll just probably give you an example, right? If I ever had to give a report back to the government and say that this is what the process includes for us to kind of do the rehab or make the changes, I would actually have to tell that right from the part that open gate 7A first, right? If there's a crack in like 7A sort of a section, you'll have to open gate 7A. Keep the keys and the lock tied down to the door, and then go up six, sort of 6 feet high, put a ladder there, then go to 6 feet high, and then kind of make those changes like that. Those steps used to be so strenuous to think that as simple as just making a small change of a rehab for a scratch or a breakage that has been there, one had to give at least 10 to 12 steps involved in it. And it's good and bad. Good that you can probably lead teams like this very kind of in a non-stressful manner. Bad is that you curtail innovation or straight thinking from one side, right? Like if say for example if it was in India, I would probably just go on a call, go to this particular door, make the changes and come back, and you don't know what's happening. But here the ability to fail also is a lot lower in the Chinese way, right? Like you got to think that because your steps are just so straightforward and stupid, you cannot fail again, right? Like there won't be failed tests again.
Yeah, it's idiot proof.
Exactly, right. So that was very interesting, and which is what we had to do with the government as well, and pass on the reports and stuff. So I did that for a year, and the next 2 years again spent with the Singapore government, again across risk. And now it was not just infrastructure. Now it was say 3D printing, say medical, so on and so forth, spread across architecture, spread across various sort of risk models. Again, we used to build risk models for various scenarios. There as well, obviously, I learned a lot more. That Singapore is actually a proper simulation, right? I think the whole country is like supremely well built, great leadership, and the orderly manner is a lot more there. So it's just impossible to fail, right? Like and so I did that for 2 years. I think probably the best kind of work that I've ever had by myself, only because the government's supremely forward thinking and forward looking. Like when you have something like that, no corporate also can match the government level because the budget is just way too high for them to kind of throw money and get shit done. Yeah, I mean, so 3 years in that, moved to the US post that, and yeah, worked there, studied there, lived
What
there.
did you do in the US?
So I studied first. I went to study. Right, very interesting story. Again, the fact that I was in Singapore, I think I thought I'd probably just settle down here. In those 3 years, I made enough sort of money that I've never probably seen, and a year in Singapore actually was equivalent to what my dad made in 10 years. So essentially in the tough time, that is, right? Like, so I was like, this is like crazy, dude. Like we've saved up so much, and this essentially gives us a superpower to do whatever we want to do, right? Like very early on in life, I was like, okay, fine, I have 23, I've made it, and I have enough to kind of do whatever I feel. 23, 24. So my choices were like just to either just continue working here and live here for the rest of my life, or move elsewhere. And I've done that actually whenever I felt comfortable. I've just kept moving, realizing that if I don't experience that, then probably I'll have a very skewed thought of the world. I moved to the US. I studied there. I did my master's at Columbia. I had like decent opportunity to work there as well with a few folks. And one of them was, Steinman Neuenberg, was a professor there. Um, he also used to be like the fund manager for that Norwegian fund, which is $1 trillion, right? Like him and his colleagues
Wow.
of sorts. He used to be a mentor of that. I mean, so I built again risk models. I mean, that's the only thing. Up till then, I actually had a fair idea. So I basically built models again across CDOs, CMBS, structured finance, and yeah, I mean,
So, and
yeah,
you were evaluating risk for their investments, like
yeah,
bonds and
like so, yeah.
debt.
So those were structured. Those were real assets, right? Like infrastructure or houses or real estates. So those were the asset classes, and I used to basically build models here and there. I mean, like that was fun. My job also at Wall Street included doing almost the same thing, building models for real estate, so on and so forth. So I mean, it was pretty good. The learnings were very different as to what I did earlier, but obviously risk is a very homogeneous thing. It's multi-dimensional, but it's a very homogeneous thing. One thing, if you know in risk, you'll actually just do it for every other thing based on the variables changing, right? Like, so finance sector, the variables change, the health sector variables change. But if you know them how to build models, you'll actually be very terrific at it. I did that. US actually brought me to the, while I did come from very capitalistic sort of a notion or an ideology, the Wall Street and the whole kind of American setup there obviously gave me a whole different perspective of capitalism. I don't think, while there are a lot of other forms of government, I don't think that there's something that exists as beautiful as capitalism, right? Like, so I was like, so driven by it. While I was doing that, I was like, how does one create more value in terms of asset classes? How does one build, kind of a repository for asset classes? How does one kind of, map asset classes of single individual over and beyond. These thoughts kept kind of recurring onto my head. That obviously gave me a lot of sleepless nights, thinking that if being a hedge fund guy in the US, I get to see 34 different asset classes. Why couldn't a common man see it kind of easily, right? Like, shit, like I should obviously think and believe that at some point of time, every asset would get digitized at some point of time, like how we have information of bank accounts or information of our personal details like Aadhaar or PAN, put in a digital locker. At some point of time, we will have for almost all the assets that one owns, like the ones we own. And that was a very interesting phase where I was thinking about all of this, right? Like, why hasn't the government built it yet, right? Like, obviously, even the US government has not built something like this, where an individual can see all his or her assets at a click of a button, right? When they could probably do that, it's scattered with different kind of regulatory bodies or repositories that you have to go knock separately to get your own data and to do functions with your own data. And that was when I started flipping, right? And when you think of it, the top rich folks actually do have an opportunity because they do have personal bankers for themselves, right? Like, so the personal bankers does and takes care of all of it. If one has to pledge, they pledge their shares or pledge their shares of shares, pledge their derivatives. It goes very deep, right? They have all the opportunities to play in the whole capitalism sort of a setup. But you never find anyone else actually do that. Like, in fact, even you do not find millionaires do that because they don't have personal bankers at ease, at will, right? Like, so that's what I started thinking, that this is something that eventually we will do it. It has to be on a public infrastructure, an infrastructure that is put out just for identification of sorts. And then pondering around this made me believe that I had to probably make a move very soon, which is why I curtailed my work at Wall Street, and I decided to move somewhere close. The reason I obviously moved back are multifolds. I mean, I openly tell this, and this is actually something that is matters a lot more to me than whatever I do today, is that my family was getting old, right? Like, my parents were getting old, and I'd been 9 years away from them. I was like, dude, it's probably 20. This was during COVID as well. I think emotions had struck quite a lot, and I decided that since this is the way, I probably I quit on a Wednesday. I booked my flight on Friday to come back to India, and that's how close it was. And I was like, okay, let me just kind of leave. But interestingly, I got another gig in Singapore, so I thought that was pretty close to home as well. So might as well kind of work here for some time and pick up some skills, which I did for some time. There it was again in now it was not risk anymore. It was actually a lot to do with infrastructure building, right? Like, I realized I wanted to get in this line of business. What do I do to learn and see how it is and stuff. The whole Columbia tag obviously helped. The idea that I did graduate and work there. So I started working in API infrastructure. I learned fair bit for about 9-10 months there.
There's like fintech API infrastructure, like say M2P fintech, and
No, it was not M2P. I mean, that would have
I
been
mean
a lot.
similar
Yeah.
lines. I'm saying
So
like
it was like a SaaS sort of an API infrastructure. So it was integrating, this software with bunch of other, project management softwares or financial institution softwares, right? Like credit softwares, basically. So one could do
like to
bill. Yeah.
sorry, yeah. Please tell me what were the
So
use
one,
cases.
yeah, so one could actually, do bills of payments. One could, settle, the contract value. One could do the payments of the contract value. One could see the duration, the timeline of the contract value. So this was a standalone software, and we had to integrate multiple other softwares directly into it. Right. So I did that work. it was very interesting because in that 9 months, my only work was actually integrating softwares and softwares, right? Integrating, like, every month of at least one or two integrations that go by. The
This was
beauty.
built for lenders, like so that lenders can get access to data about invoicing,
No,
etc. And
this
then
no. So this was basically built for projects, right? So multiple. So say, for example, engineering projects were there, and engineering projects would have, so not just the data of work but also data of bills, so on and so forth. So this basically was used for heavy engineering construction companies. Any sort of projects that potentially, kind of oil and gas, any sort of project that potentially has a lot of kind of, documents and bills and so on and so forth, payments and financing that goes into it, was actually done through the software,
and
right?
this would improve the efficiency for the oil and gas company.
Yes, this would in turn improve their efficiency. A new mode of payments, a new structure of digitization of, whatever earlier payment modes were done, and digitization of earlier documentation and contract management that was pretty much done before.
Okay, so the manual work which was happening because there were multiple systems, that basically got digitized.
Mm,
Okay,
yeah.
okay,
So I did
got
that.
it. Hmm.
That was actually a very interesting learn, only because whatever we do in FinSat today is very linked to integrations, right? Like, since ours is like proper infra sort of a business, it just includes way too many integrations, and stakeholders involved in it, right? Like, so the ability to integrate softwares and ability to kind of, push them out is supreme at something like us. uh, I when I finished integrating the eighth or the ninth software, I decided, probably learned whatever is, had to learn. It might sound like some form of another capitalism, but I thought the utility of learning and integrations was pretty much, kind of at its peak, right? Anything beyond it probably be me just doing it, and not in superior learning of sorts. uh, and again, I was obviously the time moment I felt I was comfortable and was well settled. That's when probably one had to kind of, make a move. I was still pondering upon that old problem statement that struck me when I was working at Wall Street. I realized that I had to kind of speak this out to someone, and yeah, that's when Mridul, my co-founder, and I, we used to almost talk every day about various things, right? Like, we've been great friends for 16 years. Both of us played football while growing up. uh, he probably was the best footballer I knew too as well. We played at decent professional leagues as well. So essentially, I realized that is someone I would want to do something. It's ideally Mridul, right? Like, it was a no-brainer. And yeah, we discussed about this. Interestingly, Mridul also had worked on a similar thesis before that, and he came back to India in 2018 to start another company. Much of what we do in Finsire, but in blockchain, right? So something like this obviously is very possible in blockchain, or the ability to do it is actually a lot higher, right? Like, you're not talking about holding the data of individuals in a private repository, but in a very public repository. You're trying to do that. So he tried to do that initially for about a year or so while I was still there. Obviously, when he started in 2018, there's not a lot of lookers, because the whole thing caught on fire only, say, during COVID or post COVID. So there were a few challenges, which is when, when we were discussing of something of sorts what we wanted to do. We realized that we have to do probably the same thing, because it's too good to be a problem statement of not to be solved. And we decided to start something like this, in proper sort of database system, but holding, like, with multiple, including the regulators, inclusive the repositories, getting the lenders all on one plate, and kind of the distribution as well, and eventually kind of, ensuring that something like this can be done in a public infrastructure as well, right? Much like, say, what UPI has done for payments as a public infrastructure, much like what, account aggregator or other has done in a public infrastructure. I think something like this can be. It's surprising that the government at scale. I'm sure they'll probably be thinking of it, but something like this has to be done at that level, right? And then we, kind of the whole identification part of data at least needs to be done in that level. Over and beyond that, what you do with the data, what the consumer wants to do with the data, that can be a secondary thing, right? That's what FinSat does today. Over and beyond that, uh, we build use cases around it so that the consumers can, leverage that out. but the initial phase of it, the identification part of it, in simple terms, can still be done on a very public infrastructure level where the government has an intervention and can see it, time and time again.
Let me zoom into the idea which you originally got while working at Wall Street, and now you are trying to implement at Finsire. So, what you're saying is the ultra rich uh, have access to utilize their assets in better manners. Like if you're in need of money, you don't need to sell your house or sell your car or whatever, but you can have your house mortgaged, and you can take a loan against it. Or if you own a piece of art, that artwork can be valued, and against that value you can get a loan, and using that loan you can invest in the stock market, because you know stock market is going to rise and make money. And so therefore your assets are more liquid. You can take money out through credit and use that to make more money, and so on and so forth. For ultra rich, it's possible to do that because there's a private banker working with them who can do things like assessing the value, and then working with a lender who will lend against that assessed value. For the rest of the people, they don't have this. So, what you wanted to create was a ledger of assets and covering multiple asset categories, be it art, be it property, be it vehicle, be it bonds, be it gold, whatever. So is my understanding correct, like a
Yeah, I
ledger of
mean, yeah, I mean that's a fair understanding. I mean, very few people get in the first try. Yeah, that's right. I mean, it's like like a black box or a repository of multiple assets, right? And these multiple assets are held with repository, so it's like a repository of a repository, right? Essentially, uh, when you have these assets at your own gamut, what happens is that a ledger is definitely a good way to put it as well. What happens is that now you can first identify your assets itself to begin with. You don't need to go to multiple places. Like as simple as a stock, right? Like you may be holding the stocks, some from Zerodha, some from Grow, some from your HDFC Securities, so on and so forth. Inclusive your family as well, they'll be holding at these multiple places, and it actually gets very very hard. Even as simple as that, when you want to pledge, say the shares from Zerodha, the lender would only kind of see your Zerodha shares itself to begin with. He cannot or she cannot see all of this gamut wants to put together. It's only if you take the effort of downloading the sheets and then going and giving it to a lender and then eventually transferring all the shares to one particular broker, you'll eventually kind of get a credit on that itself, right? Like that's a very hard process, not a very pleasing process. uh, um, and this actually is for all asset classes, right? Like how do you even do it for all asset classes? I just spoke about one asset class, right? Like in India, the known asset financial asset classes itself are 16, right? Like and if you consider how the rich leverage a lot more, they probably use something else, different classes also of our asset classes, right? Like some use their interior furniture as well to be pledged and then eventually get credit on that, and how do you do that, so on and so forth. So our thesis is not just credit, right? Credit is a byproduct of various kind of use cases or solutions that you can do with these assets. But as simple as say even kind of putting a down payment, as simple as say kind of putting as a collateral, right? Today, if you have to go and put something as a collateral, what's the first thing a lender would ask, or a transaction kind of head ask, or a underwriter ask? Give me your property papers. India or the world has never heard something else beyond that. Have you ever heard, give me your share details, or your mutual fund details? I'll take that as a collateral, right? It's a very funny thing that despite having all of these assets, one has not thought of putting this as a collateral. Because dude, if I'm going to go take an education loan or what they say 10 to 15 lakhs or so, and if you ask me to put a property worth 1.5 2 crores, that doesn't make economic sense to me at all, right? Like why would I even do that to begin with, right? I could probably be using this to get a business loan and start another business line itself. These thoughts have crippled down quite a lot, right? Like for everything that we do today, as simple as collateral or of sorts, we still put the house papers or the house documents, because the lenders, or because firstly because we don't have any other form of asset that gets identified so easily in the ecosystem, or I don't have that ability to do that. And two, because it's just so the systems are just so archaic for the lenders, and they're just happy seeing the paper hard asset form. and not do anything which is digital of sorts in nature. So there are a bunch of these use cases, but yes, definitely credit is one of them, and can be directly integrated in this.
So essentially, you're building the ledger, and how that ledger is used. There are multiple ways to do that. Why did you call it a black box?
Why did I call it a black box?
Yeah,
Okay, so, I mean, so having these multiple assets at once, right? Like, because you'll probably see only one asset max at one every given point of time. You got to think of it like a switch or a black box, right? The thing is, say for example, you go for a certain kind of an education loan, right? And I like education loan so much so because I never got an education loan from the Indian banks. I had probably approached like 6 7 of them, all of them rejected my application. This obviously because my family never owned a property. We had to
there
sell
was
off.
no like income proof salary. There was no
Yes,
salary
so
statement, all
exactly
that.
right. So my
Right.
family never owned a property. We had to sell our property during the crisis that we had. We had a kind of bunch of gold and kind of mutual funds and life insurance, but that would not be accepted by the lenders and the underwriters, right? So property is the only thing, and banks kind of rejected uprights and left center all on this, despite me getting into like say Colombia of sorts, right? So I was like very shocked, and I didn't want the loan also. I just probably wanted it, some portion of it, so that it would aid me in getting the visa as well, because they would probably be flipping around, how does this dude have so much money in hand. And that was a thought, right? That was obviously because of the fact that I earned fairly decent in Singapore. So I was like, okay, fine, you guys are not going to give me a loan. It's okay, right? It's not like I want something of that sort. But say imagine someone actually wants an education loan of sorts, right? And say one has about six different sorts of assets, right? Like just say your stocks, your mutual funds, your life insurance, your property, your gold kept in a locker, and say pension funds that your dad kind of gets, right? Six different asset classes. Probably these are the minimal asset class that almost everyone would have at a given point of time. And these asset classes now are in this ledger, or are in this black box, or of sorts, and it acts like a switch now. Say for example, now if you want to go take this education loan, and Finsire obviously is integrated with that. uh, they put a they put out your number, right? Yeah, there is a unique identity that's mapped onto you. They put out a number, and once they put out a number, you get a certain OTP, and you put in the OTP with your consent. The idea is that obviously you would probably the transaction, or the lender at a given point of time would see all of these assets, which is what you're concerned, which is what you've given your consent for. Now, once they see all of these asset classes that are put together, they'd obviously try to map your loan amount to it, right? Like say they can probably take 125 130% of the loan value, or say the LTV to be somewhere about 65 70 80% of sorts. They'd see which asset class kind of maps onto that. If say the first one you don't have enough stocks, they'll probably it'll switch and go to the mutual funds, right? So you have enough mutual funds of sorts, right? So now the mutual funds gets clicked, and say for example you want to select one of your life insurance, even that get clicked. So if one fails, like a switch, it goes to the next one. If next one fails, like a switch, it goes to the next one. So it fills in and takes these two asset classes, the optimal asset classes that you actually need to give to get that loan. You don't need to kind of end up giving say about whatever 1 2 crores to get like about 15 lakhs worth of loan. So this switch actually today we see in payment companies, right? Like say certain companies like JustPay, so on and so forth, solves if one payment fails, it goes to the next payment kind of gateway. Another one fails, it goes to the next payment gateway. Our thesis that can we do that with assets, like when everything is put together, albeit the consent again to select which you want to pledge is still given to the user. So the user still can select, I want to kind of pledge stocks 1 2 3 4, mutual fund 2 3 4, and life insurance one. They could even do that. So that switch is given directly to the mutual fund, to the users as well.
So next time somebody accesses your assets, they will see some assets are
Pledge.
already pledged. So they'll be like grayed out, and or they'll be like a net worth which is calculated by assets minus the liability. The liability will also be entered on Finsire.
Yeah, so both is there. So exactly right. Like so we would obviously give you the data. We are not a standalone app or a platform, right? Like obviously we integrate with likes of other companies who have distribution, right? So you can obviously see your net worth, and there's a public portal, essentially like a repository, like I said, that will also be out for us, essentially to say that which is more like a non-profit, right? Like because we're building this in a very public infrastructure where we want to be as transparent as possible, and to ensure. So net, you'll obviously be able to see what is pledged, what is not pledged at a given point of time. The lender will be, with your consent, will be able to see what is pledged and what is not pledged. This also reduces a lot of kind of mistrust in the ecosystem. Meaning, if someone has kind of pledged a property or given a fake documents for the property or for the for the vehicle of sorts, cannot happen again, right? Like if it's digitized per se, because obviously I've seen it in family house, in my own family as well, where one of the bad decisions that was done was actually something like this, right? Like one property document was circulated amongst three people, and that was very interesting to note that while payment had been done of 2.5 to 3 crores, you're talking about someone else also kind of holding the property. I mean, like, something like this is there. How why are we still not solving it? If SARS was a thought as well, so something like this would obviously restrict and ensure that these fraudulent acts do not take place as well.
Okay, interesting. Um, you said that there's a non-profit element in that. Just can you zoom in on that? What is that?
Yes, so sure. So the non-profit is only the public infrastructure that I'm talking about, right? Like it's a supremely important right of individuals. I feel that one gets to see or identify all of their assets at one place, right?
So
Like
you're
I
saying
don't.
that the ledger will be non-profit,
Yes, so the identification of the assets would be the non-profit,
and what
right?
is the for-profit part of this?
So anything beyond that is what comes for profit, right? Like say for example, today on account aggregator also you can probably see all of your information and assets of sorts. For us is the same thing, right? Like it's an extension of the AA where you can probably see all of these assets at once. But account aggregator, only if someone comes and participates will you even be able to see those assets. Now, what happens for certain kinds of assets that would never be participating in the AA, right? Like, so we obviously would cover all of the other gamut. The idea is that, and obviously put that on the ledger, and with users' consent and number and the OTP, one can basically kind of identify all of their assets at once at scale, and then eventually. If they want to show it as net worth or a proof elsewhere, they can particularly kind of, show it of sorts. The for profit is actually anything beyond and after this, right? Like if one has to, say for example, get an education loan on this, right? Like if one has to kind of get credit, plain vanilla credit on this through credit b or any other sort of company, one has to uh, uh, you know uh, use this as a down payment of buying something which is a lot more expensive in nature, something like what say Bajaj Finance is not solved for, right? Bajaj Finance is solved for all these low ticket, zero AMI sort of things. Anything which is beyond a certain value, say 1.5 lakhs, you have to give a down payment today. So someone can use this as a pledge for the down payment of sorts and directly kind of get that. So those actions that come beyond what you do with these asset classes, we have integrated with those companies out there. These are for profit,
So
and
you'll charge the lenders for the right to access and pledge the or carve out the assets.
yes, that's right. So we directly charge the lenders. The
Hmm.
the consumers do not get charged. um, I said distribution, right? So there is a certain charge for the distribution as well in terms of platform fees, so on and so forth. Like say tomorrow, if someone like if we have to create this through Google Pay, right? So on one end of it will be the lenders, one end will be us integrating with these repositories, and the third end will be all Google Pay's sort of distribution, right? Or consumers. Can this kind of so as soon as they enter Google Pay, they can probably put their number and see all of their assets put together. So eventually our thesis is that we don't want to create our own distribution, because creating a distribution actually becomes a lot harder. Is a thesis rather, how can we kind of integrate with folks who have already built up distribution in India for the last whatever 10 years or so, and latch onto them, which makes complete sense or use case, right? Like Cred can be one of them, Google Pay can be one.
The distribution app will do this for free, or they will charge you, or you will charge them.
It works in two ways. Obviously, for leveraging distribution, there is a certain sort of cent that they get, and for doing anything beyond of that functionality, obviously they do get charged. Right? Like even at the end of the day, if they are getting into something like this business, like say credit of sorts, they need the whole onboarding process, the journey, those APIs for it, so on and so forth, which obviously we have in house. We give it to them. Over and beyond that, there's also something like for their own compliance and reporting, They need to build software for that. We obviously have that also in house, so on and so forth. So reporting, compliance, everything becomes a lot easier. So by the end of the
Reporting
day,
compliance for what? Like, if I have given a loan to somebody, then I need to prepare a report that this person is still solvent. This is not an NPA. That is what you're talking about?
yes, so the lenders do that in one perspective of it. Even the
Hmm.
distribution will have to kind of report to RBI, so on and so forth, right? Through my app, my own
Report what?
user, the data of users, right? Like how much kind of has been pledged, who has pledged what is the total, what all assets have been pledged for what use. As soon as someone kind of takes up a loan, how much time that is left for kind of completing the loan. So these are the things that they need to report to various stakeholders. Some of it is also to the RBI, some of it is directly to us in the lender of sorts, and some of it is for their own in-house to understand who's taken what, so on and so forth. So this reporting software that is built is
But
directly.
why
Yes.
does a Google Pay need to report all this? Every NBFC which makes a loan would be sending a report to a credit bureau. I mean, the credit bureau is the party collecting and this data, right? Like,
Yeah, so that's the NBFC, right, which doesn't have a
hmm,
distribution. Here I'm talking about how do we create distribution. If
hmm,
Finsire is doing it by ourselves, even we may have to kind of report it to the kind of respective bureaus and stakeholders involved. Not just that, even if some kind of audit takes place, you need to kind of compile and give the data as well, right? So even
okay,
that eventually comes down to that, right? So eventually we have to give, but because we are not kind of creating our distribution, we are not having our own app of sorts to to say that boss come directly download through and through app store or play store and directly do that. That's only for testing and for people who don't have distribution. But people who have distribution is a very different thing, right? Like you will see us directly integrating like API infra and giving it to them.
so like let's say Google Pay integrates this. Will Google Pay get a revenue share when a lender
Of
is
course,
accessing this for
of
a
course,
customer and
yes.
the customer uses Google Pay to give access?
Yes,
Okay,
of course. So I
okay,
mean, that is where even they make money out of it as well, right? Like on a net, it's a very interesting sort of a case, right? Like if you believe that payment companies or if you believe that distribution companies have created sticky distribution for a decade now, you have to believe that they'll obviously garner a lot more over the next whatever 5 to 10 years as well, right? A lot more Indians would join. If someone has already created such a beautiful distribution, I mean, one has to think: is it worth my time to create my own distribution, or is it worth my time just latching onto them and giving them? And
right.
to obviously give to whatever they have done, we would obviously give there's a certain revenue share of the lending amount that eventually kind of goes to them.
Okay, so this works only if the quality of data is good. Like, you gave that example of one person who sold that property to three different people. The same set of documents. So, uh, how do you ensure good quality data that this is actually what he owns? Uh,
Sure.
you know, with a high degree of confidence, that the lender has a high degree of confidence that if on the Finsire database it says he owns this property and this property is worth 1 crore, then I trust that.
Yeah. So the for something like this, actually, it's uh, very interesting, and the reason is that this is probably the hack that I have, and this hack is actually very interesting hack that I say. For building something like this, you need three things. Three things are supremely important. One is that every asset class needs to have a unique identity, right? A unique number that is put to it. Like say, if I have to map your the property that you own in Bandra, Second Street, that'll have a sort of a number plate put on it, right? So the unique identity is very important. Second one is that these asset classes need to be held by a central repository, right? It can be multiple or like 2 3 repositories that are there, but has to be held by a central repository for it to be
Like a municipality would hold
yes,
land
yes,
records.
exactly, right? Like can be a sub registrar, can be T and RERA, so on and so forth, right? So the central repository is important to it. And the third and the most important thing, it's funny that a fintech kind of says this, but it's actually very true. It has to be regulated, right? If it's not regulated, then it's going to be supremely hard to do that, right? These three are the three most basic fundamentals of doing something like this that cannot be fudged at all, right? Like so obviously I would know that once if it's all three are the stakeholders and all three are involved, the data or the movement of data flow is actually a lot easier, right? Now you can just map all of this, like say a residential property in Tamil Nadu, which is held, which is bought by say, kind of XYZ or Shreyans. T and Rera holds the data, and if I want to transfer it, I need to kind of tell them again, and the transfer kind of dues are put out, and the ability for me to give it is tracked and traced on that, right? So there are other asset classes that do not kind of fall into these three categories. I mean, if they don't fall into these three categories, it gets very challenging and risky, right? Like
Okay,
say crypto.
let me just zoom in on this one first, and then we'll talk of the other asset categories. So, how do you know that? Okay, so you have a unique identifying number for every property. Let's stick to the real estate example. Um, how do you map it with the user that this property belongs to this unique user? Like, how do you get that data? Because let's say maybe the land records or the TN RERA will have a name of the owner, and there could be multiple people with the same name. There could be a misspelling in the name. How do you do the last leg of mapping the ownership with the asset?
Yeah, especially in land, it's a supremely big challenge here. It's a challenge that we already face here and there, right? Like it's not easy. There are multiple boards, there are multiple municipalities that are out there. Cersei, one of them, TNDERA, one of them, CDMA, one of them, the sub registrars, one of them, so on and so forth. Uh, Cracking down asset class by asset class itself is a supremely big challenge. Like residential, commercial, agriculture, warehouse, cold storage, so on and so forth. So I mean, you have to dissect it like that. First, you have to see which asset class you're going after. Then you have to see who holds, which is the body that holds on this. Now, every action that they do, firstly is it's only digitizing themselves first, and then identifying them. So it's a process that is that it's not a straightforward process, and every state has its own process. But this process is what will lead to kind of a lot more streamlining and a lot more sort of efficiencies in how this data is transferred. So we do select based on asset class. Post asset class, we see which repository is held, and identify the repository, digitize the repository. So now they probably use the tech that the rails that we have, or if they don't use that, they want to use the existing one. An API would obviously kind of showcase any sort of change that is there, with respect to certain property, right? So every pledged property would go on Ceresai, right? So every pledged property is already there, and non-pledged would be held by these repositories of sorts, right? So there's a mapping that is done of this sort. It's not an easy challenge, supremely hard thing to crack. We're not sure if we'd be able to do all states, but I mean that's the hope. Eventually, if we're able to do all states, all asset classes in this form, and mapping each repository, and it's a very kind of different sort of a mental map in that. Eventually, you cover obviously $7 trillion worth of asset classes, which is only in real estate in India, and that's a huge number in itself.
So this would only work if two things are true. One is that the authority which owns this data is digitizing, and second, they have some sort of KYC. Like with a KYC, if they have, let's say, the Aadhaar number, then it becomes easy to map ownership. Uh,
Yeah, so KYC of this is also there, right? Like, so one has to do KYCs of this as well. The other ownership needs to
mm,
match.
mm.
Also, some that is not done before, in terms of KYC or in terms of knowing who the actual owner is, would be done in this process itself, right?
Right, right, right. Typically, digitization and KYC will go hand in hand.
Yeah, so
Okay, okay.
eventually it will lead there. Yeah,
Okay, so
but
real estate is, so my understanding is real estate is probably the toughest example to talk about among the asset classes you want to do. Tell me about a relatively easier asset class.
I mean, the
What are
easiest.
the low hanging fruits?
Sure. I think the easiest asset classes, the ones that are already digitized, right? Like say something like a stock or a mutual fund. already
because there's
digitized.
KYC done, and
Everything is like straightforward, right? Like
right.
stock, and that is something that is supremely easy. Like, that you know who the owners are. It is held by a central repository. Every sort of, it's a unique identity for each ownership. Uh, the ability to move lean mark has already been set up by those APIs by different repositories. uh, Lenders understand this very well already. So it's a very straightforward sort of, sort of an integration there. Uh, so the harder ones are, of course, real estate, gold. Um, Gold held by households. I don't think that'll be the last that comes out in terms of data, right? Like, why would someone even kind of give the data? But when you think of it on the retrospect, if one wants to show their net worth, I mean, you have to do that, right? Like, that's what is accepted, and you have to probably take it and do it. So
But
that's
how would you control that the person declares I have this gold and it doesn't sell it off? That would only work if there's like a gold repository, or some gold banker who holds your gold and issues you a certificate of ownership in
You're right, which is why
something.
the lockers in gold today, they can be digitized, right? They
Right.
can be, so the gold lockers can be done.
Mm.
Uh, the lockers themselves would not know how much is the gold, but the end user can, well filling this data, so on and so forth, map it on that. So lockers can be done. There are these two, but the gold in household and real estate, even in real estate, there are few that can be done. Say commercial real estate, that can be done quite easily, right? Like, people who own the properties are, who understand the business really well. They keep flipping properties. They keep kind of, playing by, they do play with credit quite a lot, so they understand that really well. The hardest is obviously, say, farmland or agri land, right? Like, an agri land becomes supremely hard to kind of, do that. Likewise, in gold held by households, that becomes a pretty hard thing to do that.
How
um,
would you ascribe it a fair value? Let's say we're talking of even commercial real estate. How do you ascribe it a fair value? Because the value keeps changing, going up and down. And there's so many intangibles like the location and if a metro station comes up, then the value will suddenly go up, and so on and so forth.
I mean, that's a very interesting question, actually. So I was just speaking to, about this to someone. Like, most of the other asset classes, they have an ongoing sort of public value put to it, right? Like, say, stocks, mutual funds, every day you probably have a public value that comes and gets, kind of on it. Something like real estate, it's a lot more. The demand supply is a lot more, right? For something like the other assets, the demand supply is actually the whole sort of, the listing, and then people on that listing buying and selling of sorts. And it's a very algorithmic sort of a setup that is already done, right? There's algos that actually run, and the setup is already done. For real estate, what do you do, right? It is not, say, real estate property in Mumbai is increasing, so real estate property in Chennai also should increase. But say the stock value over there and here would obviously be the same. Likewise, the gold value will be more or less the same of sorts, right? So it is actually the price that is around that real estate value. Today, as of today, the whole idea is that to keep the transactional value of what was put out last as the value now, and obviously, as years have progressed, the rise in real estate price or the value there. But say if you bought a house, say, about 5 years ago, the transaction value is, I would say, 2 crores or so. But today you think it is to be sold at, say, two and a half. We would probably not. We would give you estimated value to be two and a half, but the actual value is still the transaction value that you did last, right?
Okay.
So that's how it is.
Okay. Okay. Got it. Okay. Now you said there is a second type of asset class where these things are not possible. What was that? Were you talking of gold in households or
I mean, so the quite a lot, actually, right? Like today,
art?
art is one of them. NFT is another one. That is not held by a central repository.
Mm.
What do you do with that, right? Like,
And
how do you?
NFT should be like, I mean, it's a digital asset, so
That's still possible. A
yeah.
proper art is not possible, right? Like, you cannot value a proper art. A proper art is still not possible.
Mm.
uh, the whole thesis of NFT and crypto is that they don't want to get regulated like this, or they don't want it to be come out in the ecosystem in terms of the value like this, right? Like, so someone who holds crypto
The
and
anonymity factor.
right.
So you need to have them declare that they own it. Like you need to remove the anonymity. Uh,
Exactly. So it is an antithesis to whatever they stand for as well, right? So something like this gets supremely tricky. There would be folks who actually own it but want to show it and pledge and kind of take on it. But at the same point of time, this whole anonymous sort of scenario comes in, so it gets tricky there. So there are a bunch of it that eventually is like, dude, it's going to be super challenging and tricky to do that. But as long as there's an underwriter to it, and as long as these three functions are followed, I think it is possible. And
Okay.
and that is about 16 different asset classes that is possible in India today.
Okay. Why don't you do this on the blockchain? Because we are talking of a ledger, and we are talking of doing it in a non-profit way. And if you combine these things, you just add decentralization to it, and it becomes a blockchain.
I mean, you could, right? Like, which
Yeah.
is why I said, like, Mridul had started something like this on a blockchain before.
Hmm.
It is possible. I mean, it's not like it's not possible. If
But
we
you
think,
feel blockchain will face more resistance of adoption.
yeah, I mean, which is what has happened, right? Like, we did start, and there were a lot of resistance in adopting it. Lenders would not accept it so easily. Underwriters would not do it. The whole regulatory body is just kind of appreciating blockchain, but they do believe that the other forms of it that are there are not kind of sustainable for the country. So there are a lot of stuff. I mean, when you don't kind of bet against the ones who probably want to who are writing the story for the country, right? Like, if you bet against the regulators, regulations, and lenders, so on and
Yeah.
so forth, I mean, you start off on a bad note itself. It's not like it cannot be done. I'm sure it can be done. I think that's the right way to do it as well, over a period of time. uh, Once country believes that the trust ecosystem is being solved for it, I mean, like, you would probably see this to be on a blockchain. Whatever we have for the NPO, the non-profit, would actually be on a blockchain where anyone can see it. But at the moment, when every other repository also is doing in a database way, if you do the other way, I think it's doomed to be busted. So, which is why we are
Right,
okay.
right. Yeah, yeah. The moment you talk blockchain, you're just adding noise to your story. Right now, you have a
Yeah.
very focused story. The moment you add blockchain, then some people will come on board just for speculative reasons, and some people will avoid it because of fear of speculative. I mean, it just adds noise. Got it. So I understand what you want to build. Now, tell me, what have you built so far?
Yeah, so we've obviously built for a few asset classes already, and bunch of use cases, right? So we have built for earned salary, we built for mutual funds, we built for stocks, life insurance identification is already kind of prevalent, EPFO identification is already prevalent, so on and so forth. So there are a bunch of it that we already have. There are customers for it, they're using it, so on and so forth. So when we the true value of it comes in.
Just tell me for each of these one by one how you built it. How did you build for earned salary, and why is earned salary an asset class? It's a income
Yeah,
flow, right?
yeah, it's a funny story as well. When we started off this a year and a half plus ago, no repository would give us an API as well. Right? They would, even till date, they give an API only to a lender. They don't give it to a third party technology service provider. And that's what kind of is funny and blew my mind. I'm like, if at all I have to start, I have to start with something that is a lot more liquid and flowable in nature. Which was earned salary, because it's not salary, it's earned whatever is there, and that acts like an asset class if someone holds. And I can probably see that, okay, this much money is in your bank account, I can probably lend on that if you want to, or I can give you that much money if you need, so on and so forth. That is where we start off.
And how did
Every
you do that? Through account aggregator framework?
Yeah, so we did that through a bunch of things, like bunch of rappers that are obviously there, people, folks who obviously got data from we got data from folks who used to get kind of get their salary details, so on and so forth, through corporates and the corporates that they work for, because these companies were integrated with HRMS players. So we used to get that data from multiple sources in multiple places, and eventually kind of plug into that.
Okay.
And that's how we
The
started.
primary source would be payroll softwares, basically.
Yeah, payroll softwares and companies that have integrated with payroll softwares. So there
Right,
are
right,
companies
right.
out there that have integrated payroll softwares, and kind of take the data and get the data from there, and eventually kind of see.
What kind of companies are these? I have not heard of them.
Also, there are a bunch of other API companies out there, right? So there are a bunch of other API companies that primarily focus on getting salary data
Okay.
uh, from payroll software, so on and so forth,
Okay,
right?
okay,
So
but this is a small part of Indian salary payout, right? I mean, only 10% of salary payout would be going through a payroll software.
yeah,
I'm
yeah, very
guessing
small, very small.
90% would be unorganized.
Yeah, it's still very small. It's
Hmm.
still very very small and not a big thing. I mean, but we had to start off somewhere, right? Like, so
Right. Okay.
this is the only idea that none of the other sorts of kind of tabs were open for us to do it.
Okay.
It was so that a year kind of go only when I realized this. The repositories like say NSDL or CAMS, CDSL still hasn't given. It still doesn't have APIs to give for
Yeah,
third party.
CAMS is a mutual fund. Like they have data on mutual fund.
Yes.
NSDL is equity. They have data on equity that is owned.
Yes.
Okay.
Yes. And KFintech, right? CDSL till did,
Sorry, what
KFintech.
K fintech? What does that hold?
So that also holds for mutual fund data.
Okay. So CAMS and K fintech are like sharing the market. There's something like that.
Yes,
Okay.
yes, for mutual funds, right? So,
Hmm.
so that asset class then got covered, right? There are a bunch of other asset classes that some.
How did you convince these people? Because like CAMS, K fintech are like all legacy companies, and you are like a 20 something kid almost
Uh,
in front of their eyes, going and telling them, "Give me access to your data."
so
Because
now they
like
have started giving to third party players. It was not just play. I
ah,
mean, I'm sure not just me, but many folks like me would have knocked at their doors to say, give data. Kind of let's build an API or give me the API of sorts. So then they start giving out to third party. Till then they don't give to third party. You need to have a lender, and that lender needs to be supremely comfortable with you and those players. So now we have a lender that we are supremely comfortable with, and it's not like and we do a lot of the flow of KYC, so on and so forth, with and help the lenders out.
which
And
lender is working with you?
so we have a bunch of lenders. We have TJFC, we have Liquid Loans, we have PK Finance, we have a couple of others on the wait line. So there are a lot of lenders out there.
So
But
you would have gone to CAMS saying that we represent these lenders and they want to access your data through our pipes. So we are
yeah,
building the pipes for it. Okay.
yeah. So we had to do that, and then we got that out.
Hmm.
So yeah, I mean, so it's very interesting. So now a lot of these players who have these data are now opening up slowly one by one to give out the data. Some still
But
would not.
this CAMS and all would not have given you like the fire hose of data. They would have just given you when a user is seeking a loan, then for that user, I will give you data. That
No,
must have been.
CAMs will give an API itself of the data, right? Like CAMs themselves would have an identification of assets with the user's consent. So if you put your number, a CAMs API will get triggered, and then the users all the mutual fund assets of that particular users, which obviously have the dematerialized one, the ones can be seen, will be shown on their whatever integration device it's been integrated with. So CAMS actually gives it on the plate, but obviously there's some work that needs to be done beyond for the distribution that Finsa does. But they do give with bunch of OTPs and bunch of kind of consent. You do get access to the data.
But so, no, but so you're collecting person by person, or CAMS has allowed you to access the entire database of mutual fund owners that they
It is
have?
entire, yeah, it is entire. With the consent of
Okay.
with the consent of the particular user, you can get
But so,
access.
how could you have gotten consent of millions? Because we're talking about millions of mutual fund owners.
Yeah, so that is where there's a certain number that one puts his or her number. OTP gets sent. Once
No,
OTP
no. So,
gets
did you actually have millions of people giving you the OTP? Like that's what I'm trying to understand. Like, did
Yeah,
you
so
actually?
so we don't have million users at the moment, but at a given point of time, yes, million people would be using it, and the OTP would be going back and forth from say the users to the repository. Knock at the repository. Repository pushes the data. Finsar is like the messenger that collects the data and gives it to that user's device on that user's
Okay.
device.
Okay. So these lenders are using these pipes to give out loans, and the when data is traveling through the pipe, then it is also getting added to the ledger.
Yeah.
Okay. So the more the number of lenders use it, the more data flows through the pipes, the more data gets added to the ledger. Like that's the way
Yes,
it will
yeah.
scale up.
So more lenders or more, kind of people in general, right? Distribution. If say more people from Google Pay end up using, more people from other sorts of payment application use it, it gets mapped onto that one particular lender. So whichever lender kind of sees it can have an access to it, so on and so forth, and approve, give whatever kind of credit they wants.
Hmm.
The ability for this ledger or the ability for something like a black box like this is that One is obviously the switch. Two is the whole, a bit of financial sort of logics to it. But the idea is that when you have one asset class, the volatility is obviously a lot higher. When you have multiple asset classes, your risk reduces drastically. Volatility is a lot lower. So a lot of things actually change, which now with the asset classes that we have itself, we are noticing and witnessing. Right, you'll probably realize that the LTV, of course, is increased now. It's no more, your LTV being the traditional 50-60%. Your LTV is increased.
What is
Two is
LTV here? Sorry.
loan to value, right? Before
Okay.
that, your loan to value
The
would have been a lot lesser,
So
right?
60% LTV means I have an asset of 1 crore, I will get 60 lakhs as loan.
That's right, right?
Mm.
Now your
Okay.
LTV is increased. Two is the interest rates. You before your interest rates used to be a lot higher. Now the interest rates are a lot lower because one of secured asset,
Mm.
two multiple asset being secured.
Mm.
Three, and the most important thing, I mean, something like this is actually very true that a lot of HNIs get access to it, but a lot of obviously common ones do not get access to it. Is something like a loan duration, right? Usually, when you think of it, loan duration, the longest loan duration that you'll actually get is, say, a house loan, right? You would probably not get up bigger than that. For every other asset class, actually very curtailed, right? It is done based on the credit risk of the individual if it's single asset put together. But now, how what we kind of have done with something like this is that because the assets are clubbed together, the maturity of the asset as a bundle, right? Like as you got to think of it like a same base as a bundle, has increased, drastically. So the maturity period has increased drastically for that asset class. Because the maturity period has increased drastically, your loan duration also is in your courts, right? Now I can think of before of having a education loan only of 5-6 years. Now it's put out to 15 to 20 years based on how my maturity of the asset classes are. Rich actually do this game quite well, kind of increasing their loan duration to 30 years of sorts, because your net EMI that you pay is actually very negligible, right? Like when your interest rates are low, net EMI is very negligible. So at the end of the day, your interest payments are actually more or less the same, which would not matter. You should not kind of matter quite a lot, but you're okay to push out for the longest.
Okay, got it. So you've done income through the payroll companies. You've done mutual funds through CAMS and K FinTech, and you've done shares also now through NSDL.
Yeah, NSDL.
And that is again the same thing, like a lender requesting for share ownership proof, and when the data is traveling through the pipe, it gets added to the ledger.
Yeah, that's the same thing. That's right.
Okay, okay. So how many users? You have data on how many users? Like, what is the number of?
I mean,
Uh,
that's based on the lender. Usually, the number is not told, but that's based on the lender.
no, no, but your ledger is building up that data, right?
Yeah, so we do that. We've given it to, say, about four lenders. They've given it to about, say, 25 odd different sorts of distribution channels that they have, and the users of that today use it, right? So there are, the users are in 5 digit, like, that pretty much have used it, like, 12,000, 13,000 plus have easily kind of accessed credit through it. So and
So,
these
like, the size of your ledger currently is about 12, 13,000. Like, there are 12, 13,000 uh, unique
This was
users on the
this
ledger.
yeah. So this was before we raised. So before we kind of raised, it was about 13 to 15,000 that was essentially kind of done, and a lot of people had access to it. Now obviously it's a lot more. Probably I don't know. I need to check those numbers, but it's a lot more than what it was.
Okay, okay, maybe 20, 30,000, something like that. Like, less than 50,000 is the number of people for whom you have a uh, asset information. What is your target that you want to hit by whatever some milestone that you have in mind? Like, say you want to hit asset information of 1 million users by
I
X
mean,
date.
yeah. I mean, if we have a so the thing is, if we have like a great distribution, say something like Google Pay, right? Like that itself is, you're talking about 12 crore people,
Mm.
and even if one person of Google Pay are talking about huge numbers. So
Right.
now we're in that phase where we are now going and trying to build it with distribution of sorts, but obviously build with more asset classes. Today we have what these three, life insurance data can be seen, so on and so forth. Over and beyond that, there's a lot of integration that is going in house where we integrate the other asset classes and then directly integrate with the distribution that's out there. So we are in that
How
phase.
did you get life insurance? What is the authority which has that? data?
So a bunch of players do have it as well, with respect to NIR or NSDL or kind of CAM, so on and so forth. So there are a bunch of players who just have identified the data, but over and beyond there is none. Right. So over and beyond, for doing an action on it, you still need to work. So that's work in progress.
Okay, okay, got it. Okay, and so what you're saying is the moment you crack one partnership, this number of 20,000 could become 2 lakhs in a matter of a month or two,
Yeah, I
simply
mean,
because of the
yeah, so there's a lot of
size
work
of
being done.
distribution.
Exactly. So there's a lot of, and there's not just a partnership, it's obviously a big partnership, right? Today we have a lot of partners. Our next moves, think,
The current partners today are basically lending apps. Like, say, somebody has a liquid loan app on their phone to apply for a loan. So that is what you're calling as distribution.
yes, so them and a lot of, and a few, kind of tech first apps as well, right?
Like,
They're relatively very new. So they themselves are, kind of, finding their own path, but obviously they are also
give
there.
me some examples. Like, what
Oh,
are
there are a bunch
these?
of them. Come on, like so, TJFC has also got its distribution that is out there, and they have their own tech sort of, an application, which is very nascent, given out to their own, kind of SMEs that are there. So their SMEs sort of, use that. So there are a bunch that today do
Use
it.
it for what? Like, what's the use case for these
So
apps? Like,
their use case also is credit. So they use
okay,
it. So their use case also credit.
okay. But something like a ET Money could also be a big unlock for you, because ET Money also has like
Yes.
quite a large user base, and people on ET Money are anyway there for managing their investments. So this becomes an
Yes, anything
additional.
exactly, anything like Zerodha or anything like a Grow, which is why part of the reason our investor base is also, spread across a lot. See, our investors, either they are our, they've been in the industry for longest, and they understand this business really well, or they are our potential customers. So I
Hmm.
mean, all of our investors we've chosen and picked in such a way that eventually there would be some sort of integration with them.
How did you raise funds, and how much have you raised?
So how did you raise funds? I mean, like. So when I raised funds, it was a very tough market. Yeah, I mean, it was not an easy market. Till date, it's not an easy market. I mean, it was an experience in itself to say that, the market's gone. We've left the job. Not many kind of, companies forming, companies shutting, if anything, and our initial few investors actually were infra players who were doing a lot of other things, but who are not doing something like this, right? So this is what like was an eyeball catcher, like, and to think that, okay, if one could have access to the data and one could use this data with permission and do a lot good, this would probably change a lot of kind of, ball game. That's also because, kind of, when you take credit as an example, uh, still till date secured credit is obviously, in terms of value, a lot more than unsecured credit in the country, right? Like secured credit is what makes or breaks the country to begin with. So essentially, it was that, and as one two folks came in, I did believe that a lot of them would close in and come and participate very soon. So this whole process closed in very soon after that, and yeah, we
What
raised.
were the infra players who invested in you initially? Fintech infra players, you're
So
saying?
they came in the same this thing, same round. Fintech infra M2P is invested in us.
M2P.
Uh,
Okay. Hmm.
Razer, so the founders of M2P, that is. Then
Right.
founders of Razer Pay. The
Yeah,
founding
this is an angel round, so these would all be like basically angels who have
No,
come
this is
in.
not. So this is not an angel round. So this was like, we have about 5 to 6 more funds that have invested as well.
Okay, okay.
Right.
This is more like a pre-series A kind of a
Yeah, this is a proper seed.
seed round. Okay.
The proper seed. We have, like, likes of Spark Capital, DevX, iSeed,
Hmm.
Adapt Ventures, Portal Ventures, then 1947 Rise, and bunch of mega sort of angels who together participated in this round.
So you initially, like the initial part was to sell the idea to some angels, and then they would have helped you to further connect, and that would have got the momentum going.
Yeah, I mean, the momentum was obviously, like, I was at it. I mean, I was supremely persistent. I'm like, if something like this doesn't get
How many
started,
pitches did you make?
oh, quite a lot. I mean, like, don't ask. I mean, that was quite
Like
a lot.
300 plus, like three
No,
digits, or like.
not 300, not 300. I mean, like we made to get a first yes. I probably made 20. That was pretty low. I mean,
Uh,
not even 20. I mean, the first yes was actually the easiest. Was less than 10. But to
okay.
get anything beyond that was a little hard. And after that, every almost every pitch was getting converted into a fundraiser. So we have like about 35 odd.
Mm.
Uh, Getting the first one was easy. Getting the 2 to 5 was obviously like, oh, wow, who do I talk to next, because everywhere markets are shutting. But 5 to 35, almost every call was a yes, right?
Wow.
Like and
Because the first five had come in that built credibility,
yeah,
right?
yeah. So the first 5 built massive credibility, and like
Right.
almost every call, it was like, a yes, yes, yes. But
Mm.
yeah, overall, I would have done somewhere about 70, 70
Okay.
to 70
Got
to
it.
100. Yeah, 70 to 100, of which
Uh,
35 around. Yeah.
got it. Amazing. Amazing.